Hello everyone, welcome back to Stock Market Meridian. Today is 20th August 2026 and you're watching today's post-market report. Let's begin with today's market performance. After nearly 5 trading sessions, the Indian markets opened with a huge gap up and continued to remain strong throughout the session, finally closing in the strong positive zone. We could also observe major short covering in options contracts, which added further momentum to today's rally. Coming to sectoral performance, today's bullish market was mainly driven by the media and reality sectors. On the other hand, chemical and PSU bank sectors were the only major sectors that closed in the negative territory. Now, let's quickly dive into today's top news and market updates. First update is important for the exchange sector. BSE shares came under pressure after a Bloomberg report suggested that the NSE could potentially allow its own shares to trade on the NSE platform under the permitted to trade framework. BSE shares fell around 2.5% from the day's high and traded nearly 1% lower during the session. Currently, market expectations were that NSE shares would formally list on BSE, meaning trading in NSE shares would primarily take place through the BSE platform. But under the proposed structure, NSE shares could potentially be listed on BSE while also being permitted to trade on NSE. Around 250 companies already trade through this permitted to trade mechanism. Interestingly, NSE updated its index rules in 2019 to allow permitted to trade stocks to potentially become eligible for its indices. This could eventually open the possibility of NSE shares entering major Nifty benchmarks. However, NSE would require formal approval from SEBI before allowing its own shares to trade on its platform. NSE is reportedly targeting an IPO launch in the second half of September 2026, subject to regulatory approvals. Next update is a major development from Reliance Industries. Reliance has proposed a massive 2.73 lakh crore investment over 30 years to develop India's first integrated underground coal gasification complex in Eluru district of Andhra Pradesh. The company plans to execute this mega project in multiple phases. Initially, up to 3,000 crore rupees will be invested in underground exploration and pilot testing to establish the commercial and technical viability of the technology. If the exploration is successful, around 1.20 lakh crore rupees will be invested in large-scale field infrastructure and gasification facilities. A further 1.50 lakh crore rupees is planned for downstream conversion plants and continuous commercial production. The project could create around 3,000 to 5,000 direct jobs and generate approximately 20,000 to 35,000 indirect regional livelihoods. The project will target deep-seated coal reserves located more than 600 meters underground, which are difficult to extract through conventional mining. The two blocks include the Chintalapudi block, spread across around 3,000 acres with estimated coal reserves of nearly 905 million tons. The second is the Recharla block, covering around 5,500 acres with estimated reserves of more than 2.22 billion tons. Together, these blocks contain more than 3.13 billion tons of coal reserves. The underground coal gasification process converts coal into synthesis gas or syngas directly underground. The resulting syngas can be used as a feedstock for chemicals, methanol, urea, and synthetic fuels. This could potentially help India reduce its dependence on imported energy feedstocks. Next update. The central government is preparing a major deregulation and licensing reform in FY27. Under the proposed framework, the validity of several industrial and commercial licenses could be extended from the existing 1 to 5 years to as long as 10 or even 15 years. Businesses would still have to pay the prescribed annual fees. However, they would no longer need to repeatedly apply for license renewals and go through extensive paperwork. The objective is to create a more trust-based regulatory system while maintaining statutory compliance. The reform is expected to benefit sectors including hospitality, pharmaceuticals, chemicals, and manufacturing. For example, hotel and restaurant businesses can currently face the requirement of 30 to 60 separate licenses and periodic renewals. The proposed overhaul could significantly reduce this compliance burden. The reforms are being driven by the High-Level Committee on Non-Financial Regulatory Reforms, constituted in August 2025 and headed by Niti Aayog member and former Cabinet Secretary Rajiv Gauba. The initiative also comes as India prepares for assessment under the World Bank's new Business Ready or Be Ready Index. Next, HDFC Bank was in sharp focus today. The Reserve Bank of India has approved Life Insurance Corporation of India's proposal to increase its stake in HDFC Bank to up to 9.99%. As of August 14th, LIC already held around 4.11% in HDFC Bank. This approval gives LIC the potential to acquire an additional 5.88 percentage points. Following the development, HDFC Bank shares gained as much as 1.09%, touching an intraday high of around 728 rupees. However, the bank's operational performance remains more important for long-term investors. In Q1 FY27, HDFC Bank's net profit increased 5% year-on-year to 19,059 crore rupees. Net interest income increased 6.7% year-on-year to 33,534 crore rupees. Provisions declined sharply by around 78.8% year-on-year to 3,060 crore rupees. The bank's net interest margin stood at 3.26%. On asset quality, gross NPA stood at 1.17% compared with 1.15% previously, while net NPA increased slightly to 0.41%. Next, a major regulatory update from SEBI. SEBI has taken action against Copthall Mauritius Investment, a JP Morgan entity, and Mansi Share and Stock Broking for allegedly manipulating Sensex prices during the closing auction session on August 13th. During the expiry day auction, the Sensex witnessed unusually sharp movements, including a 362-point jump in just 2 seconds and a 405-point rally in 28 seconds. SEBI alleged that aggressive buy and sell orders were placed and later cancelled to influence the closing price and benefit expiry day options positions. The regulator estimated unlawful gains of around rupees 3.68 crores and has restrained both entities from accessing the securities market and participating in the closing auction session. This is one of the first major enforcement actions under the newly introduced closing auction session, highlighting SEBI's tighter surveillance of expiry day trading. PFC and REC downgraded by Morgan Stanley. Shares of both companies fell by as much as 3% after global brokerage Morgan Stanley downgraded both stocks from overweight to equal weight. Morgan Stanley also reduced its price targets. For PFC, the target was cut by 20% to rupees 410 from rupees 510. For REC, the target was reduced by 16% to rupees 360 from rupees 430. The brokerage highlighted a growing disconnect between power sector lending by commercial banks and the loan growth at PFC and REC. While overall banking sector credit to the power industry has accelerated, loan disbursements at PFC and REC have moderated. Morgan Stanley also reduced its core EPS estimates for both companies for FY28 and FY29. Meanwhile, PFC declared an interim dividend of rupees 3.90 per share, with the record date set for 27th August 2026. Another major development is the proposed PFC-REC merger. The boards have approved a share swap ratio of 88 PFC shares for every 100 REC shares. Now, moving to the brokerage space. Zerodha is planning to bring direct mutual fund investing directly into its Kite trading app. Currently, Kite users can view their mutual fund holdings, but purchasing mutual funds or starting an SIP redirects users to the separate Coin app. That extra step is now expected to disappear. With the new integration, users will be able to buy, sell, and manage direct mutual funds directly through Kite. The Coin app will continue to operate separately for investors who prefer a dedicated platform. Kite already has more than 1 crore downloads and over 65 lakh active investors. Zerodha also has more than 3 million mutual fund investors and around 5.6 million active SIP accounts. This integration could help Zerodha increase mutual fund adoption among its massive trading user base. It could also make it easier for active traders to move surplus cash into liquid funds, debt funds, and equity index funds without switching between applications. Next, Strides Pharma Science was in focus. The stock surged more than 9%, touching around 1,044 rupees after the company received an Establishment Inspection Report or EIR from the US FDA. The report officially concluded the regulatory inspection of its flagship Bengaluru manufacturing facility. The CGMP inspection was conducted between May 12th and May 20th, 2026. The inspection initially resulted in 5 observations under Form 483. However, after reviewing the company's corrective and preventive action response, the US FDA classified the inspection outcome as Voluntary Action Indicated or VAI. This provides greater regulatory visibility for the company's operations and future product launches in regulated markets. The Bengaluru facility manufactures products including tablets, capsules, and oral liquids for the US and other international markets. Next is Glenmark Pharmaceuticals. The company has received final US FDA approval for fluticasone propionate nasal spray, According to market data, the product has an annual US market opportunity of approximately $295 million. The approval strengthens Glenmark's presence in the US generic pharmaceutical market. Fluticasone propionate is a corticosteroid nasal spray commonly used to manage allergy-related symptoms such as sneezing, itching, congestion, and a runny nose. The approval could provide another growth opportunity for Glenmark's US business. Next, Mankind Pharma has entered into an exclusive in-licensing and marketing agreement with China-based Chongqing Chenin Biopharmaceutical. Under the agreement, Mankind Pharma will receive exclusive rights to market and distribute 2 modern insulin analogs in India. The move strengthens Mankind Pharma's presence in the growing injectable diabetes care segment. The therapies are designed for diabetes management and glycemic control in both type 1 and type 2 diabetes. The products will be distributed through Mankind's extensive pan-India network, subject to the required regulatory approvals. This move is part of Mankind Pharma's broader strategy of bringing differentiated therapies from global biopharma markets to India. So that's all for today's post-market report. Today was a strong comeback session for the Indian markets, with a huge gap-up opening, significant short covering, and strong participation from sectors like media and reality. But after such a sharp recovery, the next few sessions will be extremely important to understand whether this momentum can continue. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off, Jai Hind.